Hello, good morning, good morning. Morning, good morning. Yeah, so let's see what's going on here. Daily ended up closing bullish yesterday. So we actually ended up getting the buys. But the buys came in like later now. They came in, let's see, probably New York session. Yeah, with that New York open, little pre-London, then New York open. Then the buys start coming in. Pre-NY into NY. Open over there. Man, but the whole time was just like sell, 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 choppy, choppy, choppy. Then the true clean volume. You see how clean this volume is? Look at how clean this volume is over here. You know, like this is all just choppiness. That's all choppiness. Then this is the clean volume. Getting like direction. Price start move up. You see? When price moves, man, it moves. It moves. Look at it. We close above resistance over here. And then ended up filling this range on the left hand side. You know, really nice move that was. But today, today's getting a little choppy over here. Look at the difference. So I got a lot of wicks. Not an easy day to trade, that's for sure. Benji called it out. Not an easy day to trade over here. So we got a support that's been formed right here by 43.24. And we got resistance. So this is the playground. This is where you have to look and see, how can I maneuver this area? You know, it's about you know, like 289 pips over here. So you got to look at this and then make an executive decision to how you're going to maneuver this area. You know, and you can see it's moving sideways. It's tapping the bottom of the range right over here. We just had a little bit of selling pressure from a small little accumulation break, and that distributed, but we're down to support. Down to support. We also have this minor area over here. It's also like a minor accumulation within this much broader accumulation. So what essentially you want to see is for price to break. Is to break out of this range over here. Because if we can break this range, then, you know, maybe we can start moving somewhere. Somewhere that's not here. But I think like sellers could be wanting to come in because, you know, like sellers have been holding this level here. Every time price comes in, it sells. Comes in, sells. Comes in, sells, sell, sell. But we finally got a candlestick do what these previous candles couldn't do, which is close a little bit bullish. Okay, well, today on the daily, however, we do see more selling pressure. All right, daily candlestick is down. Not by much. 0.19%. It's not that much. What all this means is just price is ranging. It's just moving sideways. So probably you're gonna want to see a break either above the highs or the lows, and then maybe get yourself like a nice little situation like this. What happened here during pre-NY New York session, because you want to see candles move, right? You don't want to see them consolidate like this on the HTF, because if it's not moving, then it's much harder. You can like get a few scalps here and there though. And like it did pay out these sellers over here. Anybody who's looking for sells, that was a really nice distribution here too. Actually, wow, that was with the London Open there. A really nice distribution. Whoa, didn't even struggle that much. My trade though this morning struggled. It struggled quite a bit. It struggled quite a bit, but that was clean. That was a clean move. That area is so hard, specifically that I'm just a beginner. Yeah, exactly. But if you're just a beginner, I think most of the time beginners wouldn't even know the difference so much. At least like my first year of trading, I didn't really know the difference too much. You know, it's like just need to just take a trade. That's all that I was thinking. I just need to see if I can get a trade. In terms of market conditions and structure and understanding how that is, I mean, for me, definitely took me time. Because every day could have been just like any other day. But yeah, if you get it, then awesome. If you know this, then amazing. So also the thing is, you know, the way I used to trade was also candle based. So I would really lock into candlesticks. So I was not always too much looking at the broader picture. I was more looking at what the candles were currently doing. But let's see on the 1 minute. Little accumulation here going on to it's setting up some, but yeah, down 0.20%. Nothing too interesting. Maybe price can break some lows over here. Start trending, because daily bias will say waiting. Got the sell off the 1 minute, 30 pip. Should have hold it, but was thinking it could be London fake out to hit the daily flip. Which one did you cash? This one. Right here before the London Open. Yeah, that was nice. I mean, it's like such a nice push. About a 70 pip drop. 70 point drop from that. Got a nice little SMA confluences also on the 5 minute time frame here. Got the 8 cross of 50. 15 minute confluence as well. 30 minute, I guess. Possibly the 1 hour. Man, you got all confluences on the SMAs for that sell off. Especially that crossover right before it drops. Why does TradingView open up this extra tab over here? What is this thing? All matrix or historical trading data. Look at that crossover right here. There it is. With the kiss of death. Right on top of the candle. Really nice. See that bully SMA? See, I just bullied this candlesticks here. Came right next to it. Boom. Tapped into it. Boom. Get down there, son. Yeah, that was really nice. Let's see. So, bullied it there towards the end too. Yeah, it's still kind of bullying it right now. Got a little kiss of deathish, but on the candlestick body over here is trying to push it more down. Candle so wiki, yes sir. Hey, good morning, tall trader. Candles are wiki. But still a pretty nice close on yesterday's daily. Look at this. Like we're still wanting to taste the all-time highs over here. I hope we can have a little taste there before the 2026 starts. You know? If we can just hit like 4,400. This volume should, I think there's still some data they're waiting on this week, and then the price maybe is gonna move up. But yeah, this is a really good sign already. We created like a support over here. But the key thing is we need to get through these wicks. We need to break at least these wicks. Because if we can break these wicks, that's going to confirm to us some kind of a momentum, right? Momentum to the upside. So that's a major key there towards 4,400. So yeah, weekly as well looking quite decent here. Remember the previous week closed above resistance by 42.60ish. And yeah, it's like we just need to get through that wick. That's the previous weekly highs. we can break that, then we're going to create some momentum for price to keep moving up there. We need momentum. Just like much of anything in life, you need momentum. Hey, the 4 hour here. 4 hours looking nasty. Got like a few wicks. Boom, 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 boom. Just consolidate within this zone. But hey, you know, this 4 hours, this 4 hour consolidation, it's happening right next to a key resistance over here. So this could be the point in time where if market starts to break that wick, most likely going to start to head towards previous weekly wicks over there as well. They start getting some candlesticks move up like this. You know, maybe you might even see a liquidity grab below here on the 4 hour. And then something of the sort. But this looks like the beginning of a potential run, you know, to ATH. I think the next time we break or next time we move, it wouldn't be like a move and a rejection like we previously had. I feel like now, since we have a bit more structure, got a strong foundation here, next time we break, it's most likely just going to go for ATH. So keep an eye out for breaks above these highs, Chad. Like I don't know when it's gonna break. I have to consult my crystal ball for that. Don't have it now, but yeah, when it breaks, man, this thing is going up. This thing is going for the ATH, baby. The ATH. So it might break in London right now. It might break in pre-New York or maybe New York session, or maybe, because knowing gold, it might even break Asia session. During the Asia session there, when everybody's off the charts, it might break then. But yeah, just keep an eye out for that. Maybe you can even send like an alert over here. You know, send an alert over here, because that will be the inception. So you can just watch it. You can watch history in the making when it starts to do that. Yeah, because surely once it breaks 43.55, surely 284 pips up towards resistance. See the size of this previous daily candlestick here? Maybe like on today or tomorrow. But this is well within striking distance even for a daily candlestick. It's really very, very possible that we might see all-time highs. But let's see, in terms of Forex Factory, today we have pound bank interest rates. Pound interest rates, they're looking to cut those. And the CPI, we got the CPI, we got unemployment claims too. So we might actually get it today, Chad. We might get it today. Tomorrow we don't really have anything. We only got retail sales tomorrow. And then next week is what? Christmas week. That's Christmas week next week. So Monday we got bank holiday. I mean, Monday we got nothing. Tuesday we have ADP weekly employment change, which is quite interesting because we still got ADP this month, and this is a second ADP with an orange folder. I feel like this Christmas is going to be very different. It's going to be a very different trading condition. It's not going to be a normal trading condition. It's because of that government shutdown, right? So you might be expecting a slow Christmas, but given the variables we got this time around, I don't think so. There's a probability, or a higher probability of volume. But anyway, we got Tuesday. We got that ADP coming out next week, Tuesday. It's an orange folder. We got Wednesday unemployment claims. And I think this is when you said the Europe's having the Christmas on the 24th. And then on the 25th is going to be Christmas now for the dollar over here. Dollar over here, Australia's going to have the Christmas too. I think Wednesday, Thursday, Friday are just pretty much the write-off days. There might be some write-off days. I'm probably not gonna stream on these days unless the market surprises me. Like I really doubt we're gonna have any type of volume on these days. So we got up until Tuesday next week, and then see what happens from that Wednesday, Thursday, Friday. But after that, it should be clear again. Yeah, after that, it should be clear. Oh, we got ADP. How the hell we got so much ADP over here? The FOMC meeting minutes happening on Tuesday on the 30th over there before the New Year's. There we go. What, unemployment claims on the last day here of the year. Couple bank holidays, but no USD bank holiday. So you really want to watch out. I guess for me, what's on my radar is just Wednesday, Thursday, Friday. Next week has potential bank holidays, and of course we have the first of the year, which should also be some bank holidays. And let's see, the second Friday. Yeah, I think normal trading will just resume, I guess, on the 5th of January. That's when we got, like, I guess normal trading again. But we still got time. We still got here until here, and then 3-day break, and then 3 more days, something like this, and then all right, awesome. We shall see. We shall see. I have never experienced a market condition like this where we have delayed government shutdown results and then starting to get a volume coming in like this. I've never experienced this. This is my first market cycle. Like, I guess for a lot of us too. Also, people just want to rest. SMH. Don't be afraid to get to the money at all times. Close sells, bought 28 here for some range play. Yeah, that's all range play. There's nothing here. What's my view on CPI? Let's see. We got CPI. Oh, and CPI today, we're expecting numbers to be coming out as good. We're expecting good numbers for the CPI, but historically we've been getting negative numbers and neutral. So I'm quite neutral on the CPI if you ask me. But we're expecting a minor increase here, a very minor increase. You know, from 3 to 3.1. But usually the increases are quite minor, and what we're expecting is good numbers for the dollar, which should mean a bearish gold. But to be honest, I'm kind of neutral. But if you want to pick a direction, then definitely bearish gold. Bearish gold, because we might get that increase. See, from previous 2.9, we got forecast 3.1, and then the actual was 3. So the actual was 3. It shows red, but it was still higher than the previous. So this was still good, but it was just shorter than the forecast. It got 2.7, it got 2.9, 2.9. See, it came out as neutral, but it was still higher than the previous. Correct? So that's what I'm thinking. Just stay with the bias. If they're thinking about an increase, then awesome. They got unemployment claims here too. So on this, we're expecting good numbers as well. We're expecting a decrease from 236 to 224. Yes, sir. That's it. So we should be seeing a positive here on the dollar as well for unemployment claims. So these two are actually looking bullish for the dollar, and that means it's going to be a bearish gold. All right. And already right now we can see that gold is somewhat moving a little bit to the downside. Like there's a bit of this selling pressure over here. These sellers in the market, you know. Oh wow, I didn't even notice this. There's such a nice little breakout over here that happened. When was this? Asia. Oh, this was what? London. Why is it showing London? Was that? Oh, that was the. Oh, that was London yesterday. Wait, what? Let's leave it here. Oh yeah. Oh yeah. That was that move. That was that move. Oh, it's such a clean distribution. Looking at it here from the 15 perspective. So we'll see how big this break is going to be. Because it's a pretty big range. So we should see a big break. or rather that's typically what's believed is going to be like the bigger the range, obviously the bigger the break. But to be honest, you can see massive breakouts just from the smallest of ranges too. Consolidations. This is a really nice one here, was inside a valley. So I filled up that valley quite good. But this one's quite big. I was saying like these are the perfect size ones, you know? Like in terms of big, in quotation big. Like these are like perfect size ones right here. Especially when they're coming in within a range like this. Those are really nice. But when you look at these ones they're a little bit finicky, you know? It's a pretty big range over there. I think, what is it, Mr. Rashid? Mr. Rashid took like also like some kind of a sell, but it was a really nice sell. But obviously you can expect bigger pullbacks as well when you have a big range. So you can break like this, and if you have no structure, you can expect bigger pullbacks. So that's why I don't like them too much. They're a little bit finicky. And break and then pull back. Whereas like the smaller ones, I expect like more of like a break. I'm expecting more of like a solid spring. Like they're just a little bit more fresh. Alright, so it's like a little tighter, it's a little bit more fresh. That's a little bit loose. You know, it's losing its power over there. It's dispersing a little too much. Yeah, but we're currently at the bottom of the range right now. So stay tuned. The big ranges play more into HTFs. Yeah, if they're big ranges, they're gonna play more into HTFs. I would actually like to see this thing break those highs, but well, what I think is because we got that news happening today. This is probably the news range, where price might even want to like liquidity grab below here. If it holds up until like New York session, we might see like a spike below here. Spike below here, maybe even a sell-off because we're expecting good numbers. But you know, like if you look at the 4-hour time frame, it's definitely telling you something else, because the 4-hour is holding this support right here, right next to resistance. Typically when price does this, it has a motive to break. It's got a motive to break like this, create a support, then it breaks. So maybe with the news, we see like a bottom wick being formed like that, and then reflip later, and then continue to move up bullish. So that's my analysis on gold. That's what I'll be expecting. We'll see how the day turns out to be. See, gold remains close to record highs. Gold dipped to around 43.30 per ounce on Thursday, but stayed near. See, it's like it's holding support right next to those highs. Record highs reached in October as expectations for further US rate cuts and ongoing geopolitical risk supported the metal's appeal. Fed Governor Waller expressed backing for additional interest rate reductions while stressing that policymakers can move cautiously. So you see market attention now turns to the delayed CPI report due later today. Meanwhile, geopolitical tensions are mounting as the US moved to halt all sanctioned Venezuelan oil shipments following last week's tanker seizure and military deployment. While Russian President Vladimir Putin reiterated his firm stance on territorial demands, even as Washington intensifies efforts to broker diplomatic resolution. See, gold edges higher. Gold edges higher on Asia early morning session, supported by some tailwinds. Oh, very nice. There are expectations for accommodative U.S. monetary policy, persistent geopolitical risks, strong investors' demand. Investors are now focused on November CPI data due later today. Yeah, that's pretty much it. We're just waiting for that data. Any evidence of this inflation would likely drag yields lower, weigh on the dollar, and open the door for gold to challenge record highs. Come on, let's go. Let's challenge those record highs. Open the door. Open sesame. Open sesame is gonna be, we need the key to go into the keyhole here by 43.54. Then we're gonna turn the key and then the door is gonna open. Open the door, then we'll just open the door, walk through it, we'll see the all-time highs on the other side. Just waiting for us here. But we need to cross over 43.54. That's the key zone right here. And it's accumulating right now to do that crossover, hopefully. But you see, because of news, we have to wait for the news. So markets are most likely going to consolidate for a while, for quite a bit over here. Has moved a lot in the last quarter. Yeah, let's see quarterly candle. Yeah, it's about the same amount of volume as the previous. Let's see. Yeah, we could make the same amount of volume from where we are if we push up an additional. Oh, how many pips is that? Wow, that's a lot. 1,286. Then we can have the same volume as previous quarter over there. Quarter before that was less volume, less volume. Yeah, last quarter was a lot of volume. Actually, last quarter was the most amount of volume for the whole year. And like 2026 would be interesting retracements. Should people also considering some kind of pullbacks to be happening? Do we see gold below 4,000? Definitely not yet. There's nothing supporting the idea. Remember, like markets move off based the macro fundamentals, right? So if we have enough macro fundamentals to support this bullish move, yeah, I mean, sure, we might have some retracement, but nothing too detrimental. Maybe even like just quick pullbacks like this. It's like quick pullback to continue to move upwards. But it's such a big area. Like we've seen, like historically, we've had some pullback like that. Market like consolidate here. This was a 2019 break. This 2019 break. You see, it's like we're kind of like in this similar period. Right over here. Actually, let's measure that from the bottom to the top. Bottom to the top is about that big. And let's see. Oh man, yeah, definitely we bypassed that. Look at how much more volume this is compared to when we had that previous bull run here. And that's actually 2001. From the 2001 support up towards 2011. And this has just been freaking yeah, this is about 2024 over here. This is from 2024. Insane, right? Man. But yeah, when we do have the retracement, it should probably come down, set up something like this. Right here. I started my trading journey right, well, it's a quarterly time frame, but somewhere between here. Let's just say Jan 2020. Jan 2020, when price was midway filling this range towards resistance. And if you ask me, obviously I would not know where the hell we were, because you know, in the beginning all this looks like spaghetti and you don't know what's going on, correct? Like you don't have that mental clarity to see, oh, you know, where we're heading. Because if you go on any instrument, the number one thing you're going to go on is a quarterly. You have to look at the quarterly time frame, because a quarterly will give you your bearings on the pair and what it's currently doing. You don't want to jump like straight into the lower time frames, because that's going to confuse you. You know, just look at the quarterly once, see what it's currently doing, and that gives you a really nice bearing. So imagine you're starting off now and you understanding that you don't need that much price action to determine where price is going to go. So if you're looking at something like this, for example, right? And then boom, you come onto the chart like this. We already know what typically happens in scenarios like this. Alright, so this is on the quarterly time frame. As you can see, clean range as always. We got accumulation. Got a little fakey below support. Little inverted head and shoulders. Got some nice SMA confluence. And then candlesticks start to break. Oh, I got this set on 1 day. Auto select intervals. Can we can't change this past like 1 day? We need some kind of quarterly candles over here. What is this trading view? That's lame. Why can we not use quarterly time frame? But yeah, anyway, like then price breaks above the highs. Boom, boom, boom. Fills the range. Beautiful. Awesome trade. Same thing that, you know, kind of happened over here. Same thing that kind of happened over here in yesterday's Asia session. I mean, yesterday's New York breakout. Like same but different, right? Same but different. This one didn't give like the inverted though. There was no inverted head and shoulder confluence, but there was a SMAs, there was a breakout, there was a clean range. Boom. See, beautiful trade. And this one is like the trade that Ruben took. This is on Bitcoin. Bitcoin on the weekly time frame. This is the one that Ruben took over here. So go on the Discord. Let's see if we can even find it. That was a while ago. Oh, I think it was Ruben. Oh yeah, it was this day. Yeah, kind of looks similar to this one. Let's see, who was this? That was Ruben. Yeah, that was that one right here. That's basically Bitcoin on the weekly. You gotta do the X-ray. This is an X-ray machine, so we can MRI this into your brain here. Won't. Little MRI session over here. Just so it sticks, you know. We gotta get that photo memory. Won't. Man, it's funny because, you know, a lot of the time, like, traders are gonna try all of these things to look at the market differently. What I used to do as well is, like, I'll put the laptop on a counter and then take a few steps back to see if I can see something from, like, you know, a different angle. Who's done that in the chat? Has anybody done that before? Like, where you look at that screen, but you, like, take a distance, you look from a distance and see if, you know, maybe you're gonna see something different over there. Have I ever done that before? Like, you're just trying to figure it out. Shout out Ruben. Okay, so I guess I'm the only one. Very good. Stops to 29 now. Let's see. Good luck. This thing is really not moving. It's just holding that area over there. So showing a little inverted too. Boom. Little inversion. I guess what we would kind of want to see is something similar to this guy's trade. Right over here, we got Is it like, yeah, maybe this one. Have XX jaw. Oh no, yeah, exactly this one. Nice one to fill the range, because this is what essentially gold is doing right now in a sense. It's just stuck in this little chop. Right? It's just stuck in this little chop. So this is what we need to see gold kind of do. We need to see gold start to break. But you see, it's not, that one's not as clean because there's no clean range on the left hand side. So it's a bit more difficult. Obviously, the market dynamics, as well as with us waiting for news here, maybe there was no news. You see, at least it looked a bit more spaced out. Whereas this looks quite tight. You have like tighter levels of support right here. You got your wicks coming in. Doesn't feel like too great, but just still need something like that if it's just gonna move. Remember, you're gonna get paid to wait in trading. The market will pay people. The problem is people overtrade times in the market which are either going against your bias heavy or they're not moving. So I guess those are the two things you have to look out for. If market is directional, like really directional, to stick with that direction. Or if market's rangy, like super choppy, to just like, you know, be very, very careful about that. So you want to be careful about taking counter trends in this fashion over here. And you want to be careful about overall trading in this fashion. Like a situation like what we have today. For example. But yesterday was quite an interesting dilemma, you know, because price was moving down, but the daily, since it had so much gains from the Asia, was still technically speaking bullish. But it was just a small little bit of structure which was moving down, but it was still technically bullish. You know, the daily candlestick was still predominantly quite strong, which is something we have not experienced in a while. I can't remember the last time we experienced that specific market environment. Jerome too late. Oh, Donald Trump is back at it. Oh no, this was... Oh, okay, this was a while ago. Yeah, Jerome too late. Powell, a stubborn moron, must substantially lower interest rates now. I like how Trump always increases capitals. I'm sure this is how he texts people as well. He substantially says now. If he continues to refuse, the board shall assume control, all capitals, and do what everyone knows has to be done. I'm gonna start texting my buddies like this, Trump style. I'm waiting on German 40 for another until 10 a.m. Then, if nothing comes, day is done. German 40 is my bitch. I just need to set up and money in the pocket. Nice. You having a good run there with German 40, huh? Vic, you're not allowed to say anything about typing in all capitals. Why not? Oh, because I type in all capitals in the Telegram. No. May go down 5 minutes, just pull back and close about 8 SMA. My top 13 MA. Now if it comes back down, then we'll sell. What time is it right now? Oh, it's about the 1 hour. First hourly candle is about to close in about 10 minutes roughly. Imagine getting your trade feeds like this back in the days. You know, maybe you got like a photocopy machine or something like that, and then somebody sends you your position like this. And you say, okay, where's gold trading at right now? I'm in a 1 minute breakout trade right here. So, man, you can't scalp like this. You gotta like swing trade for sure. You see, like even like scalping was just not like very practical to be a scalper. You definitely have to swing trade positions, actually dig into the news and all of that good stuff. All right, so today we got price trading at 43.71. Looks like I'm in profit here. Oh, damn, minus $14,000. Uh-oh. Got a bit of drawdown here on this account. See, oh, this account's also in drawdown. Minus 4,559. Damn, honey. We gotta sell the house. Let's see. Damn, this is minus 16,000. Oh, okay, okay. Here we made about 16. Minus 17. We are... what are the chances CPI comes less than expected? 50-50. No. So really slowing down here. But I think like any breakout wouldn't be a real genuine breakout. It's probably just going to be quick wicks. It might be thinking to come and correct some of this move. It hasn't like corrected these previous sellers over here. It still left them in some really good profit. It's nice accumulating down here. Could be a small little reversal play. They'll probably like look to trail their positions maybe above this high. Or some other highs over here. Do you think it could bounce back up now? It's all speculative. You know, it's all 50-50 here. We got resistance. We got support. The thing is, it should be bouncing back up because it's in a range overall. Correct? We're just at the bottom of it. So it should bounce back up. You even got a candlestick close here like bullish. Or like inducing some people to take a buy. Because, you know, we got people who like to buy lows, sell highs. You see now straight into drawdown there. It's definitely like 50-50. It just needs to break through this zone. Because if we start to see volume coming in, then that's going to be the right shoulder. Over here. Yeah, left shoulder, here, right shoulder. Skyrocket up. But if it doesn't, just the same way on the 4 hour we're consolidating right next to this key resistance point to try and break above. On the lower time frames, we could be doing the same thing to try and break below that support. You see, it's a strong support, so it's like a floor. Every time price comes, it like bounces off the floor at the bottom of the range. So like price move like this, it's trying to get enough steam to break through the wall. You know, it's kind of like limbering up over here. It's coming down towards the zone. Like the market knows these. one thing about the market knows these levels, correct? It knows them. That's why you see it comes and then it's it kind of like senses it in a way. Like I guess if you think about like maybe a fish, you know, like how a fish is in the water, sometimes like how it can like sense things. You don't even know if it like sees it properly, but like it just like moves and like kind of senses and has that reaction. So it's like kind of the same thing you see coming down towards like support like this, because it knows where its buddies were rejecting previously, so it's gonna come and also have a similar reaction. That's why I like range trading. That's why I like using support and resistance, because you know these are like physical levels that you're gonna see time and time again. The market actually has some really good reactions. The only trick with this is not to overanalyze, because if you overanalyze, you're gonna see reactions everywhere. So you shouldn't overanalyze. That's the trick about trading, is picking the right information from the chart, because you can put anything anywhere and it can make sense for you, but it's to pick the right ones, the ones that you're gonna use for your execution points. That's the thing. It's not enough just to have some kind of like, you know, some sort of a reaction. It needs to be filtered. I think that's where people also sometimes get confused. You gotta like choose. You gotta be very picky in the market. You gotta be very stubborn, you know? Very picky. You gotta be a nitpicker. If you're a nitpicker in real life, then you gotta be a nitpicker in the charts too. How will you trade the Asia session of today according to your strategy? I wouldn't. You know, Asia session of today is already done, sir. This is a London session. But if you're asking me how I would have, then how I would have, I wouldn't, because I wouldn't be trading. But like how I would have, I don't know. It's kind of difficult to say. I took a sell early on. I guess that was Asia. But it was more like pre-London time. But I guess it was also considered like Asia. So I would just trade the way I trade normally. I wouldn't change anything. I don't change nothing. You got a nice little head and shoulders pattern over here. A nice little tight accumulation. Also on the 5 minute, if you look at the 5 minute, there's a fake out above here. Left shoulder, hair, right shoulder. Boom, boom, boom. Created a support, broke the lows. And then at that point, we were off to the races with a bit of drawdown, of course. But that was a fake out I was looking at, because there was a fake out that happened above here. So I was like, oh, that's beautiful confluence. So at least we can get like some kind of a push over there. And, you know, took a sell over here and you managed to secure something. But there was a reversal confirmation that I was very, very cautious about. Like if we rebroke the highs, I'll probably get out. Buys clean range on the 5 minute back to the top. Incorrect TP of 18 should be 16. Manual close after seeing wick rejection. Win PE and hope for wick fill. Wow, look at that rejection wick on Goldie. Look at that. See, I told you, it's gearing up. It's consolidating here to try and break that support. You see, so it's like, you know, limbering up. Then it had like this hit. Try to break through. You see, it actually even broke through it. It got to the other side. It's like some kind of a rugby game or something, you know, where it's like the guy's gonna push you and then they're gonna pull back. They're gonna push back. They're gonna kind of like scrum. But yeah, that's what happened. At least I got a taste of the other side of the fence. But now that's looking like a swift reversal. Well, then look at that 5 minute. Still about like 2 minutes for it to close. But this is something on the larger scale that I'm expecting. You see, just imagine this bigger range was this, and this is what I'm expecting for news. So during news time, we'll see the same range. If we're still in the same range, that bigger range, and then have a candle do that. Live a bottom wick and then start to do something like this. That's gonna be most likely the news play, but we'll see what happens. If 15-minute don't break previous candle low and stay above it, it actually interested to look for a buy. Oh, this one right here by 43.20. It would be nice to see gold skyrocket, huh? The daily is still bearish though. We need to push up at least 105 pips to get to doji candle. GM40 only trade at 8 a.m. London open to 10 a.m. Today the setup was 5-minute early. I couldn't take it because opening 8 a.m. is crazy. Oh, 5-minute early. Yeah, I mean that happens. That's true. That's why I also changed the time to 5 minutes before the London Open, because we consistently saw some kind of trades coming in there 5 minutes before London Open. You gotta pay attention to those things. Very, very minor things. And usually it happens in pairs. Isn't there a saying something like coincidences don't happen in pairs or something like that? Well, whenever it happens in a pair, like if I notice something like happen twice, I'm like, okay, you know, there's definitely something to it. So let's see what we can catch over here. And it shows like even some of these trades, like I noticed in, I don't know, it's going to be kind of difficult to find it here, but I think that was in, was it like 5% trade, 6% trade? Yeah, it happens in pairs. So look at this. This was in July 2025. I mean, obviously, this was in July. This was on the 21st of July. So notice this trade here, right? Notice what time that... Oh, okay, you can't even see it because I'm blocking it. But this trade happened at 7:10. This was at 7:10 a.m. Got a W. Very nice. 2%. Again, the next day, 7:10 a.m. Got a W. Another 2%. Now I was looking at the pairs. You know, these things happen in pairs. I was like, okay, so 7:10, huh? Something interesting is going on here. So I said, okay, you know what? Tomorrow, we're going to hold this thing. And you see this thing? 7:22 a.m. Seal the same breakout over here. 6%. Boom. That's all that I needed. Because usually if you're going to get it twice, the third one, the market will give you. But then past the third one, it's already kind of getting a bit too late. In my opinion, that's how I look at it. Just the same way as if, let's say, price was giving me a setup here. I'm okay, I missed that trade. Another setup here. Like, damn, okay, I missed that trade. So the third one is usually a bit more safer than you get the third one. But then if you go for the fourth one, that's usually a little bit more risky. You know, on the fourth one now, maybe you can get faked out and price can keep coming down because it's already down like 1, 2, 3. So that's the same mentality in terms of what I look out for confluences in the market like this. Correct? So it happens in pairs. And remember, it's like multi-layered trading. It's not one dimension. So you have to think in multiple dimensions. So that's why I'm showing you, like, we got one example here of the chart work, and we got one example here with the timing. With the timing and how, you know, that happens like that. So, yeah, we got like 5:55. I saw there was some setups which are happening there. But I think I caught on to that one a bit later on. There were quite a few that happened before I caught on that one. But usually if you see a pattern, you got to review, especially even if you take like 2 losses. Remember, we're talking about multi-dimensional things here. You can't think of trading as just one playing field. That's why you have to have a foundation, a solid concept of how you look at markets, because you're going to use that concept in, like, it sounds confusing now, but you're going to use it across different planes, right? So now look at this as well. You have 2 losses. If you get like 2 losses in a row, you have to look at those losses and then review those losses, right? Because there could be like a pattern in them, right? There's always some kind of a pattern in them. So like for yesterday's 2 losses, and there's also a level of value in each of those recurring patterns. So yesterday's not so much value for me, at least, because all that meant was you're trading against the market direction. But for somebody else, it could hold a lot more value if they didn't already know something like market structure or like direction, trading against the direction, something of the sort, can hold a different level of value. Right, so for me, yesterday is not so much This streak over here, I tried to get something out of it, but I think markets are just difficult to trade. That's also sometimes the case. You don't always have to find like some kind of a reason. I think sometimes you just gotta have a natural order of winning trades, a natural order of losing trades. Quite normal. So there's nothing much that happened here. Oh, this one was interesting though. These two break-evens. You see, it happens in patterns, chat. Like this two break-even were like 20 pips. I noticed that every time we're getting like 20 pips, price can always reverse that 20 pip mark. Because before we were getting 30 pips easy, but then started realizing like now we're starting to struggle a bit with 20 pips. Even getting a runner right now has been difficult for me. Like I want to look for opportunities where I can get runners, but they're just not happening during the times that I'm trading. Right, so that's also started here with this month where I started seeing that 20 pips was like some kind of pullbacks over there. So you see it like happening in pairs. So you have to have a journal. If you have a journal, then you can look back at your journal like this. You can review your data, you know. There's a free journal in the description box as well, just like this one too you can use. Yeah, I think that's pretty important over there. Because you know, like every month, if you're taking like 1 or 2 trades per month, I mean, one or two, maybe 3 trades per day. Like in a month, this data here, this sample sizing data that you have for yourself is going to be very potent. You understand? Like this only like 34 trades, for example, in June. It's going to be like very, very potent. So you see how the reds also kind of like standing out over here? That's where your psychology now, your character development is. Because it's a lot harder to take a loss than it is to take a win. The wins take care of themselves. But if you're going to look at your losses on your spreadsheet, that's where I guess you're going to really dig into what may be holding you back sometimes. You know, the wins are going to take care of themselves, right? You got to focus first and see, well, what are my pitfalls when it comes to losing? You know, is that over trading? Am I revenge trading? It's always the same thing. It's typically always the same thing. Or it could just be a strategy fault. Maybe your strategy is off, or maybe the timing is wrong. Maybe the time that you're coming onto the chart might be a bit off. You see, you're gonna have to dig into a lot, especially as a novice trader. You're gonna have to dig into a lot of that data, correct? As opposed to someone who's been collecting it for years, such as myself. The refinement period is a lot more easier to see. Understand? But if you're just jumping into it first, then you're gonna have to dig into all the type of things that could affect your trading. Is it time? Is it psychology? Is it market conditions? Because also market conditions play a role. That's why sometimes we trade the shotgun, sometimes we do the swing entry. Yeah. But anyway, just getting a journal at least, like, and then slowly getting used to that process. Then it becomes like tying a shoelace, you know, at some point, and you don't really think about it too intensively as I might be making it seem, because I know someone like out there might be thinking, oh man, that's a lot of work now. Feels like throwing you into another rabbit hole, but it gets easier over time. Hey, you're in the game of information, so you got to be able to collect that data. Oh, nice. Oh, that's a very nice spreadsheet here. Entry time, a sell, max TP. Oh, you got the trade duration too. Very, very short trading over here. You got like 1 minute, 2 minute max. Sheesh. There's no 7 minutes. What was going on over here? 7 minute 30. They got your risk to reward ratios too. Yeah, if you see that, then that will always give you an idea of what to expect, correct? Because your strategy must anticipate. It must anticipate. If it can't anticipate, then, you know, it's harder for you to know what kind of like an outcome to expect. Like, well, even watch yesterday's reel that I made. Like literally how we drew those candles, or how the candles appeared on the chart, right? So you have to be able to anticipate some kind of price action there. That's why they say fall in love with the skill and the money will follow. Because when you fall in love with the skill, that additional stuff it's easier to manage. But when you're just chasing the money, then you kind of cloud yourself and you kind of hold yourself back. It's like 1 hour 40 minutes. This is max TP, but I close at 1 to 2. Data. I'm long too, but the market seems sideways now. Yeah, it is sideways. Not now, but just also like in general. I think the only push that we had was the one from the solid push, I guess, was this one pre London. You see, okay, you see what time this breaks? This broke at 2:58. Correct? So actually I think the first break came in at 56 over here. At 2:56. Break of these lows. Yeah, you see, this is why I meant. So as Ricardo said today, you know, it's like German footy, what was happening? 5 minutes. Today the setup was 5 minutes early because the opening was at 8 a.m. It's crazy. It could have been a W, right? So that's why I said. And that's why we also noticed to 5 minutes before open, you might be getting the setup already. You see in this, it broke at 2:56. So do you see the patterns, chat? Do you see the matrix? I am trying to show you the matrix, but you have to be willing. You know, you have to be willing. But you see, this is happening at 2:56. Right? We said 2:55, you can already expect some trades. Now, on another day, this could have broken and continued to distribute. Right? On this one, it gave a small little pullback. But with 20 pip stop like we typically do on stream, you would have been ace. No problem. And then it started distributing here. By 2:58, 2:59 was already in profits. 3 a.m. Eastern, 3 a.m. open. That's London open. It came back for a little pullback here. You know, it's a bit forgiving, but typically it's not this forgiving. It will just continue going without you. Plus, if you're waiting for the London open, then this would have already been a trade that's already in place. So typically speaking, you would not even take that trade, right? So yeah, this is something that we notice that also kind of happens quite a bit. So the important thing is you have the foundation, you have your entry concepts, and then it's just those additional things which is now kind of building your edge. So that's how you can think about it. You have your entry model, but then those additional things are what's been building your little bit of an edge over there. Because, you know, one trade missed or taken can actually make a difference here in the PNL. Because you could even have a W for that day or a losing trade for that day. It's like when Neo went to the Oracle in the Matrix, and the Oracle offers Neo, what is she offering? Offering Neo something, and then Neo is like, don't you already know why? Oh, don't you already know what decision I'm going to make? And then the Oracle said, I wouldn't be much of an Oracle if I didn't know that. Right? And then what Neo say? Then that's Neo made his decision, and she was like, you're not here to make the decision. You're here to understand why you made the decision. You understand? Because the decision's already been made. You're here to understand why you made that decision. So think about your trading strategy the same way. That's why you backtest a 4. It's not a time to come onto the charts and then second guess yourself and then wonder why this and that. You're just here to execute. Execute mechanically because the decision's already been made. If you see your entry model, typically your strategy will tell you take it. And when you take it, now you have to understand why you took it. Anyone notice how MT5 mobile app has changed the way you place buy stops? Neo right here. You're here to understand why you took it. I feel like you should watch that movie again. Yeah, let's see. So basically, this is the market. The Oracle is the market.
But if you already know, how can I make choices?
Because you don't contemplate choices you've already made. You're here to try to understand why.
That's your trade right there. And that's all she wrote. Man, The Matrix was literally a documentary about life. So when you apply that in the market as well, you do see the correlation. It's all about, you know, life's all about a game of elevation. We're all just trying to get to the next level, the next level, the next level. So every day it's just it's a game of elevation every day. You're trying to get to the next level. You're trying to get 1% better every day. At least trying to learn a new skill, very small skill, or just try and elevate your mindset in a sense, in any way possible, you know. Some people like maybe they're gonna learn like a new language and they're gonna try and learn one word every day, or some people are gonna learn a new skill of sorts, whatever that could be based off your interest. It's all a game of elevation, right? That's how you get to new playing fields and your mindset. It's only you against you at the end of the day, because you never know like the depth of thinking of other people. So you got to focus on where you're currently right now and how much better can you get, you know. What's the title? Let's see. Matrix is an amazing movie once you realize Neo is Jesus Christ and we are truly living in the Matrix. Please don't push Jesus in Matrix. I think the thing that confuses people is the hardware, because our bodies are primitive, but our mind is very, 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 very special. It's just our hardware is the problem. The hardware is primitive, but the software is running like a charm. So, you know, you're so much more capable of doing a lot of things than you think. Oh, what is it that scientists say? That we only use like what, 10% of our brain or something like that? You know, we don't really can access like the full amount. Man, look at the so choppy, holy. Freaking wicking all over the place. But you see, it respected that support over here. So now that becomes a liquidity grab. Liquidity grab, taking out the lows. And still stuck in the gulag. So we're going to name this over here Gulag. Gulag. Gonna wait in the gulag. Nothing to do but wait in the gulag. How do I see Euro GJ? I really don't like the Euro pairs. But you always gotta send a chart in here and we're gonna give you an idea. I often marry a bias and miss a move as it goes the other way. In this trade, there was confluence for both buys and sells. I was slightly more leaning to buys, as you see, the more naturally. I took the sell break of the consolidation. Is that a bad approach to have a mixed bias within a consolidation if there's confluences for both? It depends on like when you're trading, I guess. For me, during the pre-London time, I don't really have much of an issue with taking any counter trends, because I've seen them both play out quite nicely. Mixed biases there. The issue is with the London, you have to be very much on the side of the market. You know, London it's not as forgiving. Like London, if it's consolidating, it's consolidating. But if it's moving, then it's moving, and you just have to catch it on the right side. So I think it's also about understanding the time that you're trading. But I see you caught like a really nice move there. That was a decent move. At least it paid out. It gave like some kind of a push. Incorrect TP of 18 should have been 16. Oh yeah, you see it hit like 16. You see the pattern in there too. It usually like once it gets to that 16 mark, it can always come back and still go down as long as your stop loss gets respected, because that's the main area that's supposed to invalidate the trade. But typically it's not as comfortable to have it like push so far and then come back up like that. You know, it's not as comfortable, because you want to get 16 hit at least. Like you see in my situation here as well this morning, we got close to hitting it, but I saw like, you know, I was struggling, but it got close. It hit it eventually, and once it hit it, I think it pulled back up once it met that target. So you'll see the market will pay you. That's why you don't want to be too greedy. Most of the time you want to be securing something and not always looking for like bumper clock trade or runners, because then you're gonna miss out on profits, right? You could be picking up $1 off the street like every day, and then every now and then you're gonna find like a Benjamin. BE after this candle. Very nice. Yeah, then every now and then you're gonna find a Benjamin. I think it's like if somebody throws a stack of $100 into the sky, right? Let's just say $1,000 and $100, right? If you even see those maybe social experiments on YouTube, you're gonna have a better chance like trying to even catch like $1, right? Instead of focusing on all the dollars, because you're gonna miss on everything, you're gonna try and focus on just catching like one, or, you know, focusing your attention a bit more. Then you're gonna get something out of it. But when people are trading, they want to catch like everything sometimes, but you just gotta keep catching like one. And every now and then you get lucky, right? Every now and then you're gonna catch a little bit more of the dollars. You gotta approach it like what? Small bites? Yeah, little bite sizes. No bite size. It's not good to be greedy, right? Even the greediest people know this. If you look at etiquette and how people like eat at these high level societies, they don't eat a lot. They eat very little. They eat very little, right? It's different from like how, if you're gonna think like a monarch, yeah, and monarch probably think like, oh, the masses, you know, we're just like eating a lot. We're kind of like pigs and stuff. Like even if you watch that movie, The Platform basically, they have food on one platform and it goes down. So you got 2 people per platform. And then the idea is like every 5 minutes, I think the platform moves down, right? And the people are so greedy that they're eating so much because they're afraid. They're afraid there wouldn't be like any food. So instead of like sharing it equally, like now it's a movie based off of like human greed. So every time it goes down, like the guys get the scraps. The lower and lower it goes, the people at the bottom getting scraps from the people at the top. You know, and everybody could eat, because at some point it goes so far down, like there's no more food left, and it keeps going down, but there's no more food because everyone's just greedy, right? But if everybody was to be sharing equally, they could survive in that building. You know, they would have plenty of food, and then everybody could survive. But you see, like even a high level society, like they also like, that's also part of the movie concept as well, just to show like certain levels of thinking like this. But you just want to have like a little. You want to have a little, right? You don't have too much. You don't have too much. There's power in having little, and just like enjoying that little. Like it could be little accomplishments also, like throughout your day as well. You woke up today, you did a certain routine, like small things like that. You manage your trade properly. You took less trades, not more trades. And it's and that is actually where the success is usually found, right? In the little. And like restaurants and fine dining, they've mastered the art of little, right? And they know how to extend that too. So when you have like an entree, for example, have you noticed like when you go to a restaurant, like a fine dine restaurant, you get like an entree, correct? You're gonna have what is it that start with? I'm not an expert in this, but what is, you get like a soup, you get like something, but it's like little portions of it. But the idea is like playing on psychology, and they're mastering the art, making sure that each dish is A+ setup. That each dish is an A+ setup. Because also the thing is, like, when you start to eat, your brain starts to register the food maybe 20 or 30 minutes into the meal, right? So for you, it might think like a little food, but by the time you're getting your first plate, your second plate, by the time you're getting your third plate, your brain is already caught up to the fact that, you know, it's eating. So you're already feeling full by that point psychologically, right? So by the end of the meal, you feel like it's been a whole meal, as opposed to like if they gave maybe the whole thing all at once as well. It's still a good amount of food, but that duration, that time is also part of the experience. So yeah, I think there's just small nitty-gritty things like this that I like to think about. Very hard to, what do you call it, like put into words. But when you think of trading too, you just want to have like a little bit at a time, right? So you come onto the chart, let's say during this time, you have a little portion at that time, right? Then you're going to have a break in between, then you're going to have your next portion. And that actually adds up to something a little bit more sustainable, a little bit much nicer towards the end of the month. It'll look different if you're taking it all at once, you know, but if you take like, each one of these trades have always been separated. So you got pre-London, and then I wait London, and then I wait, and then pre-NY. It's separated. So you're allowing a bit more space, I guess. A bit more diversity. Right? You allow a bit more diversity that way. You have the market conditions play more in your favor when you spread them out. You see, like yesterday was a perfect example. What did I do yesterday? I took 2 buys in the same session. Both were losing trades, correct? Because that was the same session. But if I separated that, I would have had a better chance, even if I wanted to stick on that bias during another time. Slow London session? Yes, very slow. But hey, you should watch that movie though. I think it's called The Platform. It's like a thriller, I guess, or something of the sort. Yeah, this is the one right here. So you see, that's the platform, and it just keeps coming down. And they get like the best food. They get like amazing food. But by the time it comes down, it looks like garbage. It looks like garbage. That's how people abuse. That's how people abuse free things as well. Like when you give people free things, they just abuse it like this. You know, that's why you're gonna ask yourself, why do people who are traders that they still want people to pay for the courses and the mentorships? Is because they don't want it to get abused. You know, like when you put things out for free most of the time, like most people are just gonna abuse it. But you should watch this. You should watch this called The Platform over here. Because you see the thing with my strategy, right? Let's say if I give it all out for free, basically, and then which I already do give a lot, but if it doesn't work for somebody, let's say if somebody takes like 3 losses, it's just like trash. Yeah, it's just like used and abused, pretty much. But if somebody pays for it, then they're going to actually try and see the value of it. They're going to try and understand it better. They're going to try and understand the story. That's why, like, when you go to fine dining, you know, the guy's going to explain to you the dish, is going to explain to you the wine, because, you know, paid a lot of money for it. So you actually are going to be very appreciative of that too. You're like, wow, okay, so this is a story behind this. You got to listen, and you're going to allow them to take pride in their work, basically. That's what you're doing when they're explaining it to you. You're allowing them to take pride in their work. Something is happening. Yeah. Price is moving down right now. It's starting to break. So I always say, guys, take pride in your chart work too. You know, don't have too much on the charts. Have a little bit of the chart, little in your strategy. That goes a long way, right? There's just little points that you want to hit those points. You know? I hit those points. I would say my rule of thumb is have like maybe 3 lines on the chart. You want to have where price is, and you want to have the potential target over here. So you see prices accumulating, you got support, you got resistance, then you got your target. Like, it just keeps the chart work a lot more clean, a lot more you can see what it's doing a lot more better. But you see, in this situation, there's no zones to the downside, because anything on the downside, these are much older zones, and these are areas where markets have rejected before. So you see that long wick over here. So if you're going to take a sell, the only reason you're taking a sell is because of maybe you're anticipating some kind of a breakout, right? But this is let's see. The breakout's coming from here. You got resistance above here. It's starting to break a little bit more. It's starting to break, but it's struggling here. But I think this is where it's trying to distribute from. It's like this breakout here to fill that wick potentially. The daily bias is 0.30%. It would not be as clean as, let's say, if it broke above here, because if it broke above here, then you have like clean candles to the upside too. How to avoid fake breakouts. Yeah, I mean, just by like looking, for example, this indicator here, which is a free indicator we give, daily bias. So you see as it's waiting, that means there's still no like true volume. There's still no true direction in any specific way, right? So if there's no true direction, it says waiting. This could be most likely, especially at the London time, that could be a fake out right here. So you'd rather see it move first and be sure it's moving in a certain direction so you can get the trade. Because most of the time, as I say, you sometimes just need to be right on the direction. You know, that's like one of the most important things is if market's moving down that day, there's always a high probability, even if you don't have a good hit rate strategy, that you're still going to come out with a profitable trade. So that's the idea behind trying to be extra safe if you're avoiding as many breakouts, false breaks as possible. Just wait for the market to move. It's the same thing that happened, like if you look at even yesterday's PA during the New York session time. You see when markets move, well, what's the probability that once we broke over here, that you would have been faked out? You know, break the high like this and then it keeps moving in one direction. There's a lower probability you're going to be faked out. Now you hit the top of the range. See, you hit the top of the range, fill the range on the left-hand side. It's gone to 15. Yeah, I hit the key resistance levels over here. It actually already filled it by 43.38. But there's a lower chance that you're going to get faked out because I think here on the daily was also bullish at this point. This was plus 0.40% there on the daily. That's if you're being extra safe. This is being extra safe. Yeah, because we were 0.40% here. So as it was breaking, we're most likely a 0.45, 50% plus. It's starting to get a bit more direction in. And it's respecting. Remember when we were on stream chat, like price kept coming up. It was like at that 0.40%, but it kept struggling within this area over here. Right? Like it kept coming in and then the sellers would push in. Kept coming in and the sellers push in. So what you'd want to see is price really like stick above either 0.40% bullish or bearish. Like it can stick above those key levels. That's one way to avoid fake outs, because you'll see time and time again, like price will be trending heavily and you're going to want to take let's say it's moving price is moving up bullish such as this, and then you're going to want to take like a sell. Yeah, so just say you get a sell breakout, then you're going to end up becoming the fake out. This is going to happen to you time and time again whenever you're trading against bullish structure such as this. So that's how you can avoid a fake out. But you know, at the end of the day, it's called a fake out. So you know, you can also this a fake out right here. You see, because the daily is still like 0.30%. There's no real direction, correct? So that's how you can avoid a fake out here in a situation like this, is just by sitting on your hands and waiting for the market to trend. What's the logic behind this indicator? I just explained it. It's supposed to help you know when the market is going to be trending. So once it gets to like 0.40%, then you know it's in the beginning of when it should start trending. But it keeps pushing, that's even going to be better. Because 0.40 is like a psychological sort of like a support resistance. You know, just like we saw in yesterday's stream. Small wins accumulate quickly. This is not only about trading. Exactly, right? Like people don't see the work. People only see the success part of it, but they never see the work. But it's actually those small wins which accumulate. They accumulate and it looks like overnight. So people are gonna say, "Oh, you got overnight success," but it's just a bunch of small wins. People are not far from pigs. No, man, that's not good. You know, the thing is, like when we start trading, we always thinking that there's no abundance, right? That there's always like some kind of scarcity. But you can't operate in terms of scarcity because there's abundance. There's abundance of moves in the market. If you miss on a move, just know the next move is coming around the corner over there. It's usually the scarcity part which makes people act like pigs, you know, like for example, and it's the same mentality you're going to see everywhere. You know, if you're traveling a lot on the plane, what do people like to do, man? The plane hasn't even landed. People are already going to get their bags. They're already standing while the plane is like even touching the ground as it's landing, because they're just, you know, there's always like sort of like a fear, a sort of like a scarcity, or you know, something. Or like when you're going to collect your bags, like people are just so close to the baggage handling place, where if everybody should like take a step back, man, everybody can see the bags if you just take a step back. But you see, it's also operating from this scarcity mindset, like, oh, you know, I might not get my bag, oh, I gotta move like this, I gotta move like this. And it makes everybody, because you know, we're like we rub off against each other. So whenever we get this energy, like we all just automatically want to behave the same way. So you have to be the one to take a step back and say, hey man, like, look at this, this is ridiculous. You know what I mean? Because it's very easy for us to all get like influenced, basically. Like you're gonna see that in classrooms as well. Like when somebody doesn't know the answer and then someone says an answer, it might not be true, but the whole class might end up agreeing with them, you know, just because we're just like that naturally. So you have to be able to take a step back always in life and evaluate. Because I always say, like, this really nice quote. Let me see if I can find it here. This really nice quote. So get this, right? Your ability to grow is directly tied to how much truth you can handle about yourself. You know, and you should live by those words on a day-to-day basis. That's a bar right there. Because a lot of us want a lot of things, right? But we don't want to accept the truth about what we do on a day-to-day basis to achieve those things that we want. You know, like Denzel Washington says, you have to be able to do what you never did to get what you never had. Right? So directly tied to how much truth that you can handle about yourself. Because each individual, each one of us knows deep down inside the truth about our habits and our trading. You know, but it's very hard for us to look at that objectively and then make the right moves. Because of that same human nature thing that makes us want to stand up early at a plane when a plane is landing, or subconsciously we've just rubbed off against people for way too long and we have this certain habits. But that's why solitude, man, I can't tell you how good solitude is. You know, because for that whole year of trading, when I was trading, learning to trade, that was just pure solitude, man. I had to eliminate all the rubbing off from other people. Yeah, that made me antisocial. People didn't like it, but you know, that's what I needed. I needed a break from people and from rubbing off against these things, because you need to see things from a different perspective sometimes. I always say, by the time you hit your 20s, that's a time to know yourself. But in society will tell you that's the time to get married, that's the time to buy a house, whatever, get a job. Man, that's the time you should be learning about yourself, like unlearning a bunch of the stuff that you were taught growing up, because someone was doing the thinking for you all those years. By the time you get to 20s, you gotta start doing your own thinking. Unfortunately, some of us, we don't have the opportunity to do that for XY reasons. You know, life just throws you in there sometimes, and then you realize that a bit too late. You know, you realize that a bit too late. But solitude, man, you have to be willing to, you know, that's why I say trading is the best job for an introvert. If you're an introvert, correct? It's the best job, because you know yourself. You know, introverts are like comfortable with themselves. You gotta be comfortable with yourself first. You gotta be able to sit in a room and be comfortable with yourself. You gotta know your psychology, know your habits, know your truth. You know, handle that truth. If you're lazy, you're lazy. If you're a fat fuck and you're finding it hard to lose weight, that's the truth about yourself. You know, don't make excuses. Oh, you know, I'm big boned. Oh yeah, you know, I have this thing over here. My metabolism is slow. Man, if you're fat, you're fat. You can lose that weight. If I put you on an island, there's no way you're telling me you're going to be fat on that island. You know, you're going to 100% lose weight. Unless, you know, you're going against the laws of physics or something. But most likely you're going to lose weight. You know what I mean? So you gotta handle the truth about yourself. A lot of fat people I've met in my life always say something like that. Something about the metabolism or something of the sort, but that's just a lie. That's just a big fat lie. Because on a deserted island, you will lose weight. You look like... what's that movie called? It's a really nice Christmas movie as well. Tom Hanks. Remember that movie, Tom Hanks? Yeah, Castaway. Man, you know Tom Hanks' Castaway? The directors specifically made Tom Hanks fat in that movie. In the beginning of that movie, specifically the director said, I want a fat man who is a fat family man who works at the post office and is fat. So we can show you that if you put that fat man on an island, he will lose weight. And I, like, honestly, that was also part of the thing. Like Tom Hanks had to like gain a lot of weight for the first part of the movie and then lose a lot of it for when he started like shooting the movie. You know, that's the incredible thing about actors. They're able to be fat and super thin at will, based off their psychology, based off their mental strength. They can have so many different shapes and sizes of their body. You know, they can be super skinny, they can be really, really buff, they can be fat, and it all comes down to mental strength. That's why I said, like, the human psychology, like, if once you master that, you gotta master everything else. Yeah, but this is a W Christmas movie as well, I would say. So how much truth can you handle about yourself? That's the question here for the day. And as you go into 2026 with your New Year's resolutions, how much truth can you handle? Because this is a time where a lot of like New Year's resolutions are going to be coming out, right? Oh man, this year I'm going to do this. This year I'm going to do that. If you're not doing it today, you're not doing it tomorrow. Because later equals to never. Right? So you gotta like be able to handle that truth about yourself. But it's a goal. It's a goal, you know. It's a goal. If you want to achieve that certain goal, then you can do it. I know people are gonna get some people are gonna get offended here in the chat, but that's okay, you know. That's it's none of my business, you know. That's your problem. If you're getting offended by someone trying to, you know, give you power, then that's okay with me. Like that, because you know, at the end of the day, you can lead a horse to water, but you can't force a horse to drink. Right? You just simply can't. But that's what we're here for, you know. I guess like motivation comes in doses, and then eventually you're gonna want to be disciplined, because discipline will stick. Discipline sticks. Motivation, it comes and goes. Let's see, prices are on break below support right now. 43.23. Nice little break and retest. See if starting to move here 0.35%. It's about to get to a trending a bias in there too. It's gonna push down a little bit more. Oh! Damn, man. These sellers, we've been seeing a lot of selling pressure on gold. So much selling pressure. Like since yesterday, I feel. Or like at least it's daily highs. Since we're like hitting this daily highs here. So much selling pressure. Yeah, people also don't like that word fat. It's a shame, because like, you know, if I got some friends who are also pretty big, and you know, like I know if I say that word they're gonna somehow feel offended. You know, it's a shame. It's a shame. It's a real shame, because if I was fat myself, and which I was fat at some point, I remember there was this one time specifically, my goal was to get fat, and I got fat. And when I went back to school, back to university of like holiday break, everyone was telling me, "Hey Vic, you got fat." And I took that as a pride, you know, because for me being fat, it felt, because I've been skinny like my whole life. For me, that felt like an accomplishment, you know. So when I was back in school, I was like, yeah, man, got some meat on my bones now. You know, it's all psychology right there. Whereas somebody else calling you fat, now you're gonna get offended like a little bitch. Sorry to say, but honestly, you shouldn't get offended. If you are, and you know you are, and you like being that way, then you should take it. You should take it as pride. You know that you're heavy and you feel like I don't know, you feel good being like that, I guess. But if you don't feel good being like that, then that's the universe. That's your body giving you a signal that something needs to change. You need to change something. If that's offending you, that means deep down inside, you want to make that change. You need to change something. And you know, at the end of the day, you don't have to go and run a marathon. You just have to change your diet. Majority of it is just diet. And it depends on what you eat. You know? So when I got big, what I ended up doing was like, okay, now I've had my fun with this. I want to get rid of this now. Right? So the next time we had a holiday break, what I used to do was I just intermittent fast. I didn't eat until the end, towards like the end of the day. And also like at the same time, I did a little bit of cardio. Nothing too hectic, you know, just a little hit cardio. I used to do like hit cardio for like 30 minutes. That's it. Hit cardio is really not that, it's not that difficult. It's not that difficult, but like 30 minutes. But the trick is in the intermittent fasting, because then your body starts to burn energy from the fat. I do have a fast metabolism, so that really did help. But yeah, but either way, I got both ends. What other synonym do you prefer for fat then? Big bone. Oh, plus size. That's definitely a hard one. People don't want to hear the truth. That's true. I guess the truth is what frees you, you know? Like today the truth is, let's say if you're impatient and you took a trade and, you know, you're just taking it based off of the impatience, then you have to see that, and that's something you have to really work on for next time. Because look at this, right? Every day, think of trading like this. Every day you have a plain sheet of paper. So your truth has not yet been formed on that day, right? So every day your job is to follow your rules as much as you can possibly follow your rules, right? If you break a rule, a single rule on this specific day, there's no making back. There's no redos. There's nothing. Redos don't exist in trading. If you break a single rule, that's it. That day has scrapped, right? You gotta like crunch that paper and throw it in the bin. Then you get a new day. And that's kind of like how you're thinking about it. You're just taking it day by day. Don't think about the bigger picture yet when you're building a habit. Just take it day by day. See if you can accomplish that task on that specific day. Right? So if you do, that's awesome. And then you're just every day trying to do the same thing. Remember, there's no takebacks in trading. If you open a position, you're most likely gonna get charged, for example, like a commission, right? So there's no takebacks. So every trade, that's why I say you can only make maybe 1 or 3 good decisions a day when it comes to trading. Because you have rules to follow. Are you gonna buy the gray rectangle? I don't think there's a possible way to avoid a fake out unless you don't trade breakout. There's a way that also, you know, for example, Ricardo likes this technique, and I've actually been considering using this technique from time to time, where it's if the candle breaks, you're gonna wait for a candle to first close above that area. That's one way to avoid a fake out on the 1 minute. Don't get in on the break, but wait for the candle to first close and the next candlestick to break, which I've seen actually, you know, it does help. That technique also does help. And I used to do that, but not knowingly that I was doing that. Because sometimes I'll just see if the candle breaks, because it only had like 10 seconds, and if it breaks and then continues to break, then I'm in. But now I've been more consciously looking for those scenarios. Like, for example, if you take yesterday's trade right over here. So you see the candlestick broke, got on the break, but if you waited for that candle to break the highs, it gives more of a confirmation. You see, because it didn't break the highs, it gives more of a confirmation, right? See, it didn't break the highs. It closed. The thing about this is sometimes it's gonna like put you a very big slippage if you're meant to get in here and you get in here, but sometimes it works really nicely, you know. Sometimes it works really nicely. Like here, for example. Yeah, this is a perfect example. Look at that. I didn't even have to go so far back to look for anything. This is it right here. That would be a perfect example. You see it like broke, and instead of like getting in here, could have waited for that candle to get rebroken. And then it all comes down to your ability to wait, you know, like can you, oh man, and this looks so clean too. Sheesh. How clean that is. Price came down, you're in this little valley over here. Candlestick broke above, broke the highs, nice little SMA confluence. Damn. Damn, Daniel. And look at the way this candle over here just skyrocketed because of the amount of orders that were getting filled over here. A very nice confluence zone. See how big that candlestick was? Just straight nut to the upside. There's a very high confluence zone. And plus you also got a liquidity grab situation down over here. So you see, it's like you can wait for the most best setups only if you're patient, you know, only if you don't want it bad enough. You gotta sometimes not want it bad enough in a sense, you know. You gotta be okay with coming onto the chart and not taking a trade. Because if you're okay with that, then that means that, you know, the ball is in your court now. The ball is in your court, so you get to decide. So you can even just wait. If you got like ultimate patience, man, you can just wait for the best type of setups. And man, doing that alone, you're gonna take less trades in the month. 100% you're gonna take less trades. But let me tell you something. That month your P&L is gonna look like what you want it to be looking like. But you have to be okay with not taking a trade. And then have that already, like you gotta, you know, the best setup is the one that you can identify. So you gotta like draw on a piece of paper, maybe have a screenshot of it somewhere, and then just wait. You have it next to your trading desk, and you gotta say, these are the simple rules that I want to follow. This is how I want it to look. Maybe you got like 3 points in there. What we need to have, like just like 3 points or something small. But the visual is what you want to see. Correct? Maybe you're gonna write there in a bullet point, at least a liquidity grab as well. Or something, I don't know, anything you want. But you're gonna have the visual and just wait for that exact thing. You're gonna miss on trades, yes. And you're gonna feel FOMO because you're gonna see trade opportunities which fit the mold of what you're looking for, but not entirely, I agree. But when your trade comes, and you're gonna know deep down inside, gut feeling, like this is the one right here. You know, this is the one right here. So you're gonna feel good. Even if you took a loss in that trade, trust me, you still feel good. It's like a breath of fresh air in a sense. You're like, you know, I waited and this was the one. So for me, it was a W. You actually feel a sense of W just because you waited for that specific thing, which is quite interesting. That's why you're gonna see me sometimes on stream. I take a loss. Maybe you expect a reaction, but if it was exactly what I was waiting for, then you know it was what it was, and then you feel like that W inside. Screenshot of your setup trade helps a lot. Yes, yeah, it does, because you know it's like a very visual process trading. So you can't even imagine the setups in your head. Tried and proven. But when the breakout skyrocket the whole range, that's what we like to see. Isn't that like a shotgun? Yeah, that's a shotgun. Shotgun on the 1 minute. Wait for the second candle and also make sure it creates a wick before moving your direction. No reason it should retrace its own wick in the same candle. Let me see your abs. I don't have abs. I'm actually 25, but I'm up. I think I'm about like 20% body fat. So here I am talking about fat people, but I'm 20% body fat. The abs are in there. They're in there somewhere. You know, it's all diet. If I started doing like ab workouts now, I would be wasting my time. It's a complete waste of time because you still won't see the abs until I change my diet. I treat people using diet and massages. It works wonders. Blood pressure and diabetes, arthritis. Oh, nice. Too many sneakers. No, it's because I'm bulking. It's I'm bulking. I'm eating calories. I'm just trying to bulk. Cause I want to look big, so I don't mind the additional weight that comes with the bulking, cause I need like the calories. It's about to go down. Yes, sir. See, I'm fat too. I'm fat too. Cause I wear pretty tight shirts sometimes, you know. So I'm not gonna walk around like so insecure about it. You're super insecure about it. It's not good. You know what you're doing. See what's going on here. Fat and tight shirts. Not a good mix. Not a good mix. No, it's certain angles, you know. Certain angles kind of looks funny. Gotta hit the treadmill. I low-key have to start hitting the treadmill though. Gotta hit that treadmill. Yeah, it's trying to move. It's trying to move. But you know, the tricky thing is that where is it going? Because there's nothing too interesting here. You know, it's just like trickling to the downside. Creating your lower lows, lower highs. Let's see, what you say? NY session sweep. Oh yeah, that's New York session lows. NY session sweep should actually be down here. That's why 43.14 is a New York session sweep. So it still has quite a bit to do. Quite a bit of selling off. Like about 73 more pips. At 0.35% right now. See, stocks recover from AI-led bruising. Central banks in focus. Global tensions are rolling commodity markets. Oil prices extend a rebound from 5-year lows after Donald Trump ordered a blockade. But I would think this war between, not this war, but this thing going on between Venezuela and Trump, for me in my head, it feels like not such as a big event as something like Russia-Ukraine. So it is a fundamental that is part of geopolitical tensions because, you know, to be fair, there hasn't really been much of anything beyond Russia-Ukraine, and also that's been quiet for quite some time. So I guess they're kind of like just throwing it in there, but I don't see this necessarily moving the market like gold. You know, I feel like gold is more focused on these numbers that were so delayed by the government shutdown. Because you're gonna feel it when it's geopolitical tensions moving the market. You feel it. You really do feel it. But nowadays we're not feeling anything to do with that at all. Trump said later on Wednesday the next Fed chairman would be someone who believed in lower interest rates by a lot. By a lot. Yeah, Trump's gonna put in somebody who's gonna be cutting interest rates over there. So we should be able to see gold go up for 2026 next year. That's nice. The next Fed chair would be someone who believed in lower interest rates. But it seems like he's doing the masses justice by lowering interest rates. You know, that's always good for people. He can win a lot of favor from the people like that. But you know, the way rich people work, they don't give anything out for free. So the people will end up paying for that later. I don't know how he's planning on making them pay, but they are going to pay. They're going to pay for those lower interest rates that Trump is pushing so much. He's not doing this out of the goodness of his heart. He's going to find a way to benefit off that first and then make the people pay for it later. It's always good to be cynical in this world. Then you learn a lot about the economy and how money operates. I don't want to dig into it, but I'm sure if you dig into it a little bit more, you could most likely find some due diligence on what's actually going on there. With why he's forcing like so much interest rate reductions. He's not just doing it for the favor. Even with stuff like stimulus checks, when it gives people like stimulus checks and that sort of thing, the people just pay for it later. But I think, see what gold is doing over here. Gold is getting backed up. Yeah. Have you seen that before of David Goggins? Yeah, guys, really shifted his life. Apparently, David Goggins has been around for quite some time. I think he went viral on social media not too long ago, but apparently he's been around for a really long time. But we only see him now, right? We only see him now, but we never saw the small little bits of work that he put in. See, like Goldie looks like it wants to reverse back into the range. That's a small little accumulation. It did like a small wick fill over here, but it's really choppy today. Well, what ideally we wanted to see is price at least break these lows and then keep following through to the downside. You know, just keep on pushing. Out at BE. Smart move, smart move. Well, that was a decent attempt over here for price to come down. Pretty good. Nice BE because see it's like coming up, it's pulling up again because it's just range bound. Let's see Daniel looking good. Gotta sell over here. It'll look good. Let's see if it plays out. It's coming towards a stop loss, so right here by that top wick. So you know that's the whole idea behind the stop. It's if you're gonna let the stop hit, so that means this is the whole idea. Is if this high gets broken, then that invalidates the trade, right there by 43.27. If it gets broken, then there's no longer a trade. So you should never remove the stop loss. If you're gonna be letting your stop losses hit, then never remove the stop loss. It invalidates the trade. Because trust me, like your good trades are not gonna hit stop loss, correct? They're not gonna give you much of a hard time, and they're not gonna hit your stop loss. Pay close attention to fib zones. I took the same trade. It was a W. You close at 65% range fill. Nice. Oh wow, look at that. Exactly at 65% range fill. You had a clean support on the 5-minute, took a breakout, and then price corrected the move. You see, you took like a little piece of the cake over here. You're not being greedy, and you see you got paid for it. You reap the benefits of it, because too much of anything is gonna be bad for you, correct? So I think like that's kind of what the theme of the stream was here today, and what I was trying to explain with the platform and being a pig and, you know, like being greedy and all those things. Because like too much of anything is really just bad for you. Like even if you look at stuff like let's take for example essential oils, right? So if you got essential oils, and let's say you put in a diffuser, and you know you like your house to smell a certain way, or you're just doing it for aromatherapy, and you know it helps with relaxation, it helps with like a bunch of other things as well. But if you're doing it too much, I think with aromatherapy, it's maybe like 30-minute sessions you're supposed to be having. But if you do it too much, there's no benefit past that point. You know, it's only becoming detrimental to you at that point. So that's like the same idea over here. It's like if you're going to be always doing too much, always expecting the range to get filled, it's always going to be detrimental. That's why I say in trading, the best thing is always to under-analyze instead of like over-analyzing. Right? When you overanalyze, that's what happens. And that's what happened to me a lot. I used to overanalyze and have profitable trades come and hit my stop loss like this. So much of the time, you know? So much of the time. So you see, like, this is an overanalyzing over here as well. Because, you see, you're expecting price to come all the way down to 43.12. So you're being kind of greedy on this. I would say you don't typically need to have such a thing. This just shows like it looks good like this, but as you can see now, structure wise, it's getting into drawdown here. It's just unnecessary, you know. That's going to be around from here to 43.12. 43.12, you want 108 pips. It's crazy because like you see, okay, you don't have to trade the way I trade, but man, all of these trades here are like maybe 16-20 pips. I'm up 20% for the month so far, 320% for the year. These are all 16-20 pips. You're looking for 100 pips. You see what I'm saying? Sellers make money, buyers make money, pigs get slaughtered. That's the saying in Wall Street. That's what they say in Wall Street. Is at 16-20 pips. If you're gonna take big swings like this, then you have to have conviction. You know when trades like this play out? When market structure is in your favor. Right now, like your stop loss hasn't been hit yet. It could still play out, but it's just not, in my opinion, a very high probability trade setup. We have unemployment claims coming out. We got some news coming out today. CPI coming out. You can clearly see markets are ranging. There's no volume in it. The daily is only down 0.30%. You know, this is a very different type of feeling that when you have on other days where prices, for example, just moving with structure like this. You're going to get away with those trades on those types of days. On these types of days, it feels more like a gamble. And now, you know, the issue is like consistently doing that is where the issue is. Because the market doesn't consistently move perfectly like that, unless you're like very patient and you don't mind taking very little trades, but the market will not consistently move like that. So the market throughout a whole week For example, a whole month is like very dynamic. You're gonna have some of these smooth moving days, but they say 90% of the time the markets are just consolidating, right? Like all markets. Like if you consolidate all market, like 90% of the time it's just like consolidating. It's just holding. It's just holding like Powell. You know, like how Powell likes to hold interest rates. That's a mentality of the market. Like overall, it just holds. It's not volatile. That's why one day you're gonna wake up and your euro or your pound or your dollar, it's not gonna depreciate by a lot, or it's not gonna increase by a lot when you come to foreign exchange, because the general market is consolidating. It's not as volatile as Bitcoin. You know, so that's a kind of like a mentality that you can see sip into the trading psychology. But I know it's very difficult to understand, especially when I show you like a quarterly time frame on gold like this, and you say, "Oh, but Vic, it's going up." I get what you mean. It's a paradoxical thing, but that's the reason why you don't want to overtrade, because the way the market is engineered, it's engineered in a way it creates just enough chop to make sure you don't come out profitable if you're going to be an overtrader, right? It might not look choppy to you, but trust me, you're trying to find like you're trying to put it into a corner, right? When you have a strategy, you're trying to put it into a corner that's something that you can consistently execute on. There's a very small window of opportunity every single day, and if you're going to end the day with a profitable trade, man, you jumped right through that window and you made it on the other side, and you should be proud of that. You should be proud of that, you know, and you should just like say, okay, you know, I'm happy to call it a day, or I'm going to risk less on my next trade. So worst case scenario, I got a bit of insurance, right? If I take a losing trade, I got some insurance. So you can see, for example, yesterday, right? So yesterday I had one trade, two losing trades. All right. So that came out a total of, I was down for the day, let's say just roughly around 0.10, 0.20% over there, right? But that was 3 trades because I reduced my risk on my next 2 trades. And then today I only had 1 trade and I made that back, and my PNL is overall back on top again. Do you know what I mean? So it's that play. It's like that tug and pull with the market that you always have to be seeing. How can you put yourself in the best possible position to keep the money that you made for the day? Because that's going to compound and make your next day a lot more easier. Watching Castaway now, that Goldie doesn't want to move. WWW. I watched that movie, I think, like maybe 4 times. At least probably like 4 times. No trades in this session. Nice, bro. I took a W2, but slightly misplaced TP. Had a manual close. Today's definitely a slow day, very slow market. Yeah, it feels like it feels like it's because it's the December holidays, but I think the truth is we're just waiting for CPI. We got CPI at 8:30 a.m. here. That it has nothing to do with the slowness of December that people talk about. It's we're waiting for news. It's just like any other day. We could literally be in March right now. You know, it's just another day waiting for news. But I reckon it's gonna be something like yesterday, because yesterday the volume was also, it was good, but it slowed down a lot during the London. It consolidated quite a bit here during the London, and then it only moved during the New York session. Well, it definitely is getting a little bit more when I'm just looking at PA like this on the 5-minute. Goldie is getting a little bit more angsty, that's for sure. It feels like it's getting a little angsty. Yeah, I can even see with my trades, like this week the 2 dubs that we took, I don't think they were super stress-free trades, especially the second one. The second one literally was caught in choppiness and got nearly stopped out. And it was the same thing that happened to me this morning as well. Like got caught in choppiness on this trade. So definitely feeling a little bit of angst in the market. But somehow it's moving. Like I don't know, like somehow it's still paying traders. Even if you look at specifically that one trade that came in during London Open, that little console breakout that I think Luke is the one who caught this one. I'm not sure if it was exactly this one, but that's the one that distributed quite beautifully over there. And it played out nice. Actually, that trade has been the one that's still playing out here. It's still distributing. Surprisingly. 115 pips down. I think yesterday your 20 pips stop had perfectly. Perfectly. Yeah, exactly. And you see, it was exactly at that mark, right? Usually the market likes this range between 16 to 20 pips on my strategy. So yeah, like 16 pip or 20 pip. It's like an additional psychological barrier. Correct? This is another one that I forgot to mention last time too. When we're talking about the difference between physical and psychological support resistances, it's also one right there. I should write them down. Make like a video. Make one video about it because it's really important, right? It's really important. It's what people usually use to govern break-evens. When they're going to break even, when they're going to take their profits, where they're going to set their stop losses. So it's not fugazi just because there's no structure there. It's a hidden form of structure, but it's based off of your strategy and your entry confirmation. Because remember what I spoke about. Any entry or any strategy will be put in a box. Right? And that box, you can only manipulate so much in that box. You can only manipulate so much the stop loss and so much to take profit based off the conditions that are needed to execute. So everybody's going to have slightly... They might have slightly different. Like when I started learning how to trade, the system I was trading was 10 pips. Right? So at 10 pips, it needs to secure something at 10 pips, because at 10 pips the market will always have a reaction off of a 10 pip move. That was like in 2020. And the ranges themselves, they also needed to be at least 10 pips, 10 plus pips. Like the ranges, for example, from right here to here, at least 10 plus pips. And we also did that in 2024. If you remember, like beginning of 2024, I think it was where our ranges, we needed our ranges to be, I can't remember exactly how many pips, because we're trading the shotgun play a lot. So we needed a range of at least 10 plus pips. I think it was too. Because anything below that, even if it's like 8 pips, it actually makes a difference and it actually changes the probability of whether that can be a winning trade or not. So the more pips, the better of that range. To a certain extent, because if it's a too big of a range too, if you're, let's say if you're getting normally 10 pips and then you see one day you have like a 100 pip range, it's a very obvious range. So those types of ranges typically like experience a trickle effect, where price will fake out and then pull back, fake out, pull back, fake out, pull back until it completely fills up that range. So whenever you're looking at ranges, you always want these like little discrete ones, right? Like these little discrete ones. Like for example, I think this is one here. See on the 5 minute. The super obvious ones are not really the best. Yeah, like something small like this. Little discrete range from here to here. You know, we got a lot of volume on gold, so this range will actually be a lot of pips. So from here to here, that's about 38 pips. Nice little discrete valley where it can like fill up properly like this. These are best right here. The little, again, we're going back to the little, right? Not the mass. And for a runner, it can have a bigger range here. For the runners, it doesn't really matter. And that's what we cover on the WAP database when we do our simulations, when we see like how we're going to leave running trades. You're using the higher time frame now to determine, like, let's say there's clean traffic here, to have a probability for price to continue to run beyond that zone. Because maybe you got like clean traffic on the 15. They got like clean traffic up towards like that resistance. You see how that works? Alright, let's see. 5 minute sell from here. Beat by Snazzy. Yeah, some days you just know, like, even coming into this London session, I just knew that this London was going to consolidate like this. Oh man, what is Trump saying here? Instead of saying 1 million, instead of saying 1,450,000, what do you say? 1,000. You want to say 1,400 and something. Yeah, but that's just nitpicking though. Obviously, that's what people do. He's not perfect. Warrior dividend. Warrior dividend. Man, I love how Trump makes stuff up. You see, when you're rich and you have money, you can make stuff up. So he coined that warrior dividend. Sending every soldier $107,076. I'm telling you, like, when people give you free shit like that, you're gonna pay for it some way. This is like, that's like what Diddy used to do. Diddy used to groom people like that. Oh, okay, wow. You're talking about recruitment numbers. Did you know that Tom Cruise movie actually increased the recruitment numbers in the military? What was it? The fighter jet one, when he was a fighter jet pilot. Anyway, nice little Christmas gift over there. Yeah, prices are ranging heavy now. Do you use Instagram? Yes. You can follow me on Instagram. Here, let me send you guys my link. Doo-doo-doo. Probably's got some nice range to the upside if that breaks. Got an annoying little wick though. Oh, I didn't see that. The small little wick over there. Because you see, like, this wick has already filled the range when it pulled up. So essentially doesn't look as great anymore. Maybe it's about like 8.4 pips. Vic, can you explain rate cuts, how they affect the market and Fed links in simple way? Just think about it this way. The US dollar, in the most simplest way, if they cut rates, right, it doesn't matter how much, like 25 basis point cut or 50 basis point cut, the more the better for gold, right? But either one is going to make gold go up. So if you're trading gold versus the dollar, then if they cut rates, that weakens the dollar. Weakens the dollar for gold, and for dollar, and price on gold should go up. And if they increase the rates on the dollar, then gold will go down. So you just think of it like a lever of sorts. You know, so lower interest rates, bullish gold, higher interest rates, bearish gold. So think of it like a lever, like that. Yeah, I mean, but like it can get quite complicated as well, because something like Japanese yen, if they cut their interest rates, then that's good for the yen. It should, technically speaking, be good for the yen, right? Because they usually cut interest rates. Because when their interest rates are lower, they have a lot more investments coming into the country. So yen always is notorious for cutting rates. They never really hike their rates. When they hike their rates, man, there's a problem. It's not like the dollar, where it's like good also for economy, like hiking the rate. But with the yen, it's a problem because of just the way their economy is structured. Right? But yeah, you don't really need to get into that, because it can get a bit confusing. It can get a bit paradoxical, because at the same time when the yen increases rates, they will actually move the market up. Right? It actually moves the market up. So like the yen does get stronger on paper, but not in reality. And that's the thing about economics. You know, economics is a very paradoxical thing. You know, that's why Trump can give free money away. And you always wonder, like, who's paying for this money? You know, only when you really dig into it and into the details, and you're like, okay, so that makes sense. But you see, that's the thing about me, is I'm not a very smart person. So I try and keep my whole routine around trading like very simple. So I focus on one instrument, and I know how the US dollar interest rate cuts affect this one instrument. And I know how geopolitical tensions affect this one instrument. I don't need to know the book on trading to catch a trade, because the reality is a book is not going to tell me what's currently forming right now and how to manage my risk if I was to choose to take either a sell or a buy here, buy above the highs or a sell below the lows. And then identifying that consistently in various market conditions. That all just comes down to experience and seeing it happen over and over and over again. And that's it. And then you just use those key points. Like, everybody should have a key point when it comes to macro fundamentals, which is something that I ignored for a long time, because I did quite well without knowing any of that stuff for a long time. But it really does help you understand the broader scheme of the market. But if you would just want to like trade the technicals, you could get away with just technicals. It's just, again, a matter of like, if you want to elevate, you know, some people don't want to elevate, so they're going to be happy with what they get. So you can just get away with technicals. A lot of successful traders just trade technicals. But it's only when things get difficult, you don't have anything to fall back on except your technicals, which is going to be very depressing, because, you know, when markets are not moving the way you want them to move, you're going to find yourself in a very victimizing mentality of, oh, your markets are garbage, this is garbage, this is so bad, instead of looking from a what's going on perspective. You know, for example, I can give you a perfect example. Like on the daily time frame here on gold, we had just markets ranging. I remember the only reason we were ranging was because we were waiting for rate cuts. So when we made that breakdown video, we're like, guys, we're about to have gold skyrocket. We're optimistic. You know what I mean? But like somebody who's just looking at the technicals are going to say, oh, look at the gold. It's like garbage right now. It's not looking that great. But we were so optimistic. We're like, man, we're about to have fireworks. December is going to be awesome. We're going for all-time highs. And then we got the Fed rate cuts actually come in exactly what we're waiting for. And then we saw the bull run. And, you know, we're still anticipating more of this bull run. So I guess that's the difference. That's the difference in the mental space you're going to find yourself if you compare someone who just does the technicals and then someone who uses both fundamentals and technicals. You know? Let's see, price trying to break these lows. Yeah, break the lows by 43.22. Then you see, also think about it this way as well. There are people who genuinely enjoy the stream because they get information from the stream. You know, whatever information you get every day, you're getting it 1% better every day. There's something new that you're learning from the stream every day, right? But then now there's a certain population of people who join the stream just for the signals. Those same people, they're kind of like, you can think of them like a dehydrated muscle. You know, because when the signal doesn't come in or there's no signal, they start to feel uncomfortable. It's half like almost dehydrated, right? Because it's like operating in that same space of you're just simply not focusing on what needs to be focused on. You know what I mean? Like you're with crutches. You're with crutches right now. You know, that's what trading with technicals only feels like we just explained. It's like you're gonna look at for example, going to look at this, right? You're gonna look at this and then that's gonna be like the dehydrated muscle. So for you, it's like gold is not doing anything. It feels like uncomfortable. But like if you know what's going on and you know the process and you're putting the pieces together, you start to see the outcome. Right? You start to see, and that's already a skill in its own. That's a very entrepreneurial skill. That's why people who are starting businesses, you don't survive when you start a business for the first time when you're always looking for just the ups. Anybody who's going to survive in business is already expecting the drawdowns, right? They're already expecting the lessons to be coming in, right? So it's much easier to relax during those dehydrated periods. Correct? Because that's what you also do when you got like a muscle pull. Do you fight the muscle pull on your leg? You don't fight the muscle pull, you relax. You relax. You start to let go and you start to understand, okay, I need to breathe. I need to understand this muscle pull, you know? Be one with my body right now and just try and relax that area. That's what the opportunity God has given you when you come into the chart on a day like this. This is like your muscle pull. This is your muscle cramping right here. Oh, this is a muscle cramp. So that's the thing about it. That's why I always say, where's Chatbot over here? See, Chatbot will also tell you, isn't send it in a while. Don't trade like a raisin. Drink some water. I'm trying to bring it up. Don't trade. Yeah, here we go. Waiting for a setup. Perfect time to drink water and stop trading like a raisin. Someone's trading like a raisin, like, oh man, I gotta get this trade right now. And then, you know, eventually you take a trade and it's a losing trade, but you feel a little bit better, but you know, it's you're just forcing yourself into the position that you shouldn't be in the first place. But if you relax, man, you gotta be okay. You gotta be chill over here. Like, I don't have a hard time waiting. If you have a hard time waiting in a market condition like this, then you have a problem. You have a problem. The problem is the need to trade. But if you understand and you have that foresight that markets will open up again, not now, but in that pre-NY time, that's going to be in like 30 minutes. That new hourly candlestick typically is the one that's going to give you some kind of a volume and direction. Then you don't mind waiting, and waiting is not so bad. You know, for me, I know pre-London time, I'm trading for like about an hour. So waiting is not so bad for me. I know for the London session, maybe like 3 hours. So I can go 2 hours without a trade and maybe get even on the last hour. You know, it's not a big deal. If I don't get on this hour, then I know the next time I have a chance is going to be pre-New York for just one more hour from 6 to 7 typically. And yeah, at that point, if I don't get anything, then it is what it is. But if you don't have that set of routine and that's foresight, then yeah, it's going to be very tricky. Because basically the market's going to blow you like a feather. It's going to feather you off to one part where you're gonna be happy. It's gonna feather you off to one part where you're gonna be experiencing all these feelings of these emotional feelings. It's gonna like blow you around to each different island of emotions. So you can't be a feather, man. You gotta be like a signpost. You know, you gotta come on there. Or you gotta be like that fisherman with his chair. You know, a fisherman, they come with their chair and then they plant themselves in that spot. Boom. And then they don't move. They don't move. And whatever the day brings, the day brings. But the whole idea is when they went to go fishing, they went to go fishing. They didn't go catching. That's why it's called fishing, not catching. Right? But if you're going there to catch all the time, catch. Imagine the two psychologies of those two fishermen, right? One is just going to catch, and the other one is just going to fish. You see, the one who's just going to fish is going to enjoy it. It's going to be chill. He's going to read the paper. He's going to have his drink. You know, maybe catch something. Awesome. Stress-free. The other guy is going to be like fishing like a raisin, you know? Like his life depended on it. And he's not going to catch anything. He's not going to enjoy the experience. Especially if you're going to be doing that for the next 10 years. Imagine trading for the next 10 years. So look at yourself now. Look at your habits right now. Right? Imagine yourself doing this for the next 5 to 10 years with whatever habits that you have on a daily basis when it comes to the charts. Is that a stress-free way that you anticipate to do for the next 5 to 10 years? Because trust me, I've seen really good traders lose the plot when they're already profitable because their system maybe was too difficult to manage, right? And they couldn't sustain that. And eventually they just lose the plot. So the way you move is going to say a lot about your longevity in this thing. And you know, we're here for a long time, not a good time. I mean, a long time and a good time. We're here for the long time. So if we're going to be here for the long time, we got to be here stress-free. Stress-free. See, it's 2023 and the years go by so quick. There's a 2023, 2024. I don't have data for 2021 upwards, but you see 2023, 2024, 2025, and that's it. Why do I only trade pre-London and London? Because I've been doing it for the past, I've been doing it basically for such a long time now. I'm so used to the way markets operate in those times. Like it's just like tying a shoelace. You know, like every day I've been in this, you see the same market condition. This is not the first time that we've been here. We've already been here before. This is just a different day. It's like similar market conditions, but it's just on a different day, right? So your ability in trading is to just recognize not only when to trade, but also when not to trade, because we've been here. And then tomorrow we're going to be somewhere else. Maybe tomorrow we're going to be on one of those days where it's like super easy, very nice to trade, but we've already been here before. You know, the more you get market cycles under your belt, you start to realize like all these days, they're just days. Market only moves like up, sideways, and downwards. Yeah, some days we have all-time highs. Some days we have crazy news events. But they're just all like, you know, in a sense, what's already in the memory of what you've already experienced. It's just your ability to know what condition that is and then classify that and say, okay, this I remember this day, so this is how I typically approach a day like this. Or I know this day, this is how I typically approach a day like this. That's literally what it feels like if I could explain it the best possible way to how somebody who's been trading for, let's say, years, because I know some of you only been trading for a few months. That's how somebody who's been trading years feels like. But for you, since you're still in your few months, you need at least one market cycle, at least just to get the ball rolling. You know, and then the second year is typically when you start to understand it a lot more detailed. At least for most people, that's a natural progression, right? But I don't know, some people might be faster, but that's a natural progression. The first year is the figuring out stuff and you're gonna fuck around a lot. The second year is the refinement year, and the third year is the profitable year, generally speaking. It doesn't have to be that long, but I think that's a very generalized way of thinking. But I do know that at least the first year, definitely you do need to get a market cycle. Vic lost my job in March, then blew my account, no capital, but I come every day to your live. Thank you, Ragnar. I appreciate you, son. You look quite young in your profile picture there too. So you know you got a whole life ahead of you. There's like to figure things out. And I didn't figure it out till I was maybe yeah, like mid-20s. And I felt like I already lost a lot of time. But judging by a picture, it's not even a lot to go off of. But how old are you, Ragnar? But I'm guessing you're maybe below 25. Let's see, that's a guess. And be honest, don't lie. Don't lie. Are you below 25? Ragnar. Hey, you're 25 exactly? Hey, dubs. WWW. WW. Still not bad. Still quite young anyway, to be fair. All right. Thanks for the Vix, for the amazing lives. Thanks, Daniel. Thanks, appreciate it. Was the Discord still on? Yeah, I think so. All right, chat. I think I'm gonna end off the stream now. Do we have like 18-year-olds? Yeah, I'm sure we do. Yeah, I think we're gonna end off the stream now. It doesn't look like Price is doing much of anything. So I will see you all tomorrow for Freaky Friday. So take care, everybody. Take care.